Chris, welcome to the show.
Steve, thank you for having me. It's been a long time coming.
Yeah. And let's just start with your Bitcoin journey. So you look like a relatively young guy here. So tell me, how did you get interested in Bitcoin and crypto?
Yes, so my Bitcoin journey actually started in 2014, the fall of 2014, which was the bear market of the second market cycle after the late 2013, early 2014 run up. So I actually did, while I was in college, undergrad, a case study on how to tax virtual currency. At the time, the largest virtual currency was Bitcoin. Ethereum had not even been launched yet. So it was how to tax virtual currency for PwC. So presented in front of those partners and went down the rabbit hole because it aligned with my interests in technology, investments, and economics. So that was kind of where I initially went down the rabbit hole, and initially got interested in Bitcoin. Continued to research in the market, network within the space, personally invest, understanding exactly how this fits. But at the time, it was a sub $20 billion asset class, so it didn't seem like, as I was studying finance, there's going to be a massive career move after undergrad. However, I actually moved into the industry full time in 2018. I joined a firm called Morgan Creek Capital as a venture investor in early 2018 after the 2017 run up. While I was there, we invested in companies building the infrastructure and the market structure for this emerging asset class. So invested in large exchanges and custodians, investing in data companies, lending companies, other managers, trading platforms, things of that nature, understanding how people build secure, compliant, scalable, institutional grade products and services for this emerging market. I was there for a little bit over a year, did about 16 investments at my time there, and anywhere from kind of first check in all the way to kind of Series C, Series D. So kind of got to see a wide array of deals and companies in this space. While I was there, I saw a massive opportunity, very underserved market. And I guess I'll kind of take it back a step. My dad's a financial advisor, so grew up in a household investing at a young age, interning for him in the summers, understanding how advisors work with clients, how they look at alternative investments, how they fit things into their portfolio. So had a good understanding of the wealth management market, and then obviously being able to cut my teeth in the Bitcoin and crypto market, working at Morgan Creek and investing in all of those companies that were building the infrastructure. Kind of saw a massive opportunity as I was, networking and speaking with a lot of advisors at the time. This was late 2018, early 2019, where we were just coming off kind of the 2017 cycle, right? Advisors were still trying to grasp what this was. We kind of hit a low at 3,100 in December of 2018. So I'd actually, talking to these advisors, what I kept hearing was my clients want to own this. They either currently have assets at an exchange like Coinbase, but they want to move it under my purview, or my client wants me to execute an investment for him and add it to his portfolio. How do we do that? And after I heard that for the 20th time from an advisor, I realized this is a massive opportunity and that I wanted to take advantage and serve this market, build the correct products and infrastructure for the wealth management market specifically. Left Morgan Creek in May of 2019, ended up raising a seed round from basically wealth management executives that understood this market and had built SMA platforms in the past, large wealth management firms. You've had a couple on your podcast, Mark Cassidy, Barty Bicknell, people that understand this market, understand how to do distribution, technology, marketing positioning, all of those things. Sat in a room with those individuals, and we decided that a separately managed account platform was kind of the right solution for the wealth management market, and more specifically, the first market that we're working with, which is the independent RIA channel. So started building that out in November of 2019. We privately launched basically the first Bitcoin SMA, so single asset SMA, in March of 2020. Working with our initial RIA partners, we built out a fully scalable platform to hundreds of advisors, tens of thousands of clients, fully integrated to their workflows, both on the onboarding side as well as on the integration side, while building everything kind of on our back end, which is kind of security, compliance, trade execution, reporting, all of those things. And then we actually publicly launched our offering in November of 2020 with our largest client, Mariner Wealth Advisors, large investment, one of the largest wealth management firms in the U.S. Since then, we have brought on 25 RIA partners that collectively manage over $120 billion. So we work with all of those advisors to help both educate, right, their advisors on this asset class, which we try to use simple language, right, articulate in a simple way so then they can articulate it to their clients. And then also talk about, portfolio construction, how it fits into a model portfolio, and then all the operations associated with that. So we can get in more specifically, what we do with Eaglebrook, because it's technology, it's asset management, it's research, it's integrations, it's kind of all of these things because this is a very new market. And the SMA structure we think is extremely interesting for customization reasons, tax optimization, direct ownership, which I'm sure we'll get into. But that's kind of my background, where we are now, and how we're currently working with the wealth management market.
So you mentioned Mark Cassidy and Marty Bicknell, so a couple of big heavyweights in the industry. What was your connection to them?
Yes. So one of my mentors is Mike Alfred, who previously built a data company in the wealth management RIA market. So I had been working with him. He previously founded a company in the crypto space, data company in the crypto space. When I told him about what I was building, he was super interested. He wanted to help out. He joined Eaglebrook as a founding board member, and he made the connection to both Mark Cassidy and Marty Bicknell. Talked to them about what I was thinking about doing. They liked the idea and decided to back me back in 2019.
So let's talk a little bit about the infrastructure here. So I know one of the complaints that a lot of advisors have is the difficulty of trying to make a crypto investment. I mean, we've got a lot of consumer options here, whether it's through Square or PayPal or whatever, or going to Coinbase or Gemini directly. But then getting the pipes in place for a financial advisor to integrate it within the workflows of the existing financial infrastructure that they're using, the different software systems that they're using. So tell me a little bit about, let's say I'm a financial advisor and I've got a client. The client is interested in owning, let's just keep it easy. Let's just say it's Bitcoin. They've got $100,000 that they want to, the advisor wants to allocate into Bitcoin. And let's say this is an independent RIA. So now walk me through the mechanics of how that would work with you guys.
Yeah. So as you know, all independent RIAs have different tech stacks. So it's somewhat dependent on that. What we do with a lot of the RIAs we work with, as they're typically larger, is that we do single sign-on to their basically intranets, where they just click go to Eaglebrook. From there, it creates an account for the advisor or CA. On that page, they can then open an account for a client. And we take right now basically every type of registered account: individual, joint, trust, LLC, nonprofit, right? All.
So what
Yeah,
what
go
kind
ahead.
of account are they opening on your site? Is this on your site, or is this like being passed through to, say, Gemini or somebody else?
Yeah, so we're partnered with Gemini Trust Company on the back end, and they do all basically the custody of the assets while we do all the onboarding, KYC, AML. We have a fully digital onboarding that takes a few minutes versus working with the custodians directly. It's typically a paper onboarding that can take lead times of anywhere from 7 business days to 20 business days. We onboard clients same day. So if a client says, "Hey, I want to do 100K at 9 a.m. in the morning," our onboarding, even for sophisticated accounts like an IRA or a trust, takes only a few minutes to onboard. All digital. Client digitally signs the contract. They get onboarded. We then go through our approval process, which can take up to 2 hours. From there, that the account will be approved, and the client can send a wire from Fidelity, Schwab, TD, or Pershing. So that's kind of what our workflow is, and all of our wires are coming from brokerage accounts of those traditional custodians.
So do you have any issues with like the KYC, AML? Are you taking snapshots of their driver's license? Are you understanding where this $100,000 is coming from? I mean, how do you get around all that stuff? Because if I go to Coinbase or if I go to Gemini, I think it's going to take longer for them to approve opening the account, or maybe not. So how does that work? What are you doing differently maybe that some of these other firms aren't doing?
Yeah, that's a good question. And it's kind of all of the above. We collect all the KYC, AML, suitability information, driver license, passports, DOB, SSN, basically just PII, which is necessary to open the account. And then we have a proprietary onboarding system working with basically dedicated personnel on the compliance team for Gemini to package all that data and quickly approve it, right? Because our account is viewed as low risk because it's all of our clients are currently at an RIA, so they've already gone through KYC AML, and all the assets are coming from a reputable brokerage firm, or custodian, which is Fidelity. Schwab is about where 90% of our wires are coming from. So it's deemed low risk. We do about 95% of the work, and then Gemini can easily just check the box because we've done our KYC AML. They then do their KYC AML as well, but that's kind of done in one workflow process that's fully automated, where there's no sending paper back and forth. It's all done via API, which is how we're able to onboard clients same day, which is a very fast lead time in this market. And even with some of the retail platforms, which can take a few days for ID to be verified. So we basically expedite it. We're not onboarding, thousands of accounts a day like these retail platforms. We're really working with, like you said, 100K average account size is 220,000. So we're kind of working with lower volume of onboardings, higher basically ticket size is how we work with advisors right now.
So we've got the money, it's come in, we've approved it, the account's opened at Gemini. Gemini is the custodian. So how do I actually make the trade and turn that $100,000 of fiat into $100,000 of Bitcoin?
Yeah, so we do all the trading. We do work with advisors to put together a market entry strategy, which can be anywhere from, hey, market order, TWAP, VWAP, dollar cost average. Hey, set these four cascading limit orders. Hey, invest 50%, leave 50% in cash. We have a trade instruction screen before they send the wire that basically allows them to select that. So right when that 100K wire hits, it's already automated into the strategy that they had selected right when the wire hits. So if they did 100% market order, wire hits, 100% market order. If you said, hey, leave 100K in cash, we want to wait to trade it or set limit orders, it's leave in cash. Or if it's DCA 10% over the next 10 days, right, 10% a day, we would do that as well. So it really is just dependent on what market entry strategy the client recommends. A big thing we're hearing kind of working with large firms like Mariner and Dynasty is we don't want our advisors to day trade. We're actually glad that it's held away because we want them to look at it as an alternative investment that you're going to hold for 3 to 5 years plus, as opposed to, hey, my client invested 50K, now it's at 35. We want to sell, hold in cash and get back in. They don't want their advisors day trading. If the client's going to take a position, you kind of want to buy and hold it, which is kind of what we would recommend to advisors as well. Or kind of accumulate through a dollar cost averaging strategy. So that's how we work with advisors right now.
So the example we're talking about here is Bitcoin. And do you offer Ethereum and any of these other cryptos out there as well?
Yeah, so we actually are really focused on just Bitcoin and Ethereum right now. We can go into the other strategies that we're kind of working on right now and we'll be launching. But the way we think about it is that Bitcoin and Ethereum are the only assets in this market right now that truly have network effects and a critical adoption of both networks. And then if you look at Metcalfes Law, right, those are the assets that are going to continue to be the market leaders in perpetuity. Before advisors are going to move into DeFi or competitive smart contract platforms or distributed computing or interoperability protocols, which we can kind of discuss our thoughts on there and how we plan to launch products in those assets specifically. If they can't understand Bitcoin, Ethereum, then you don't want to throw all this complex jargon and information at them. So we start with educating just on Bitcoin, Ethereum, and go from there. What we're doing right now with basically the RAs we're working with is we'll put together customized portfolios, right? Some RAs are just like, hey, I want Bitcoin, I want it tax optimized, I want to own it directly, I want to see it in my Orion, right? So we basically allow for that. But some say, hey, put together a strategy, right? For us, we are looking for this. This is kind of the risk that my clients are looking to take. We are, very bullish on both Bitcoin and Ethereum. Let's put together 60% Bitcoin, 40% Ethereum. All 100 of their clients will get onboarded into that strategy with that market entry strategy, whether it's market order, limit orders, dollar cost averaging, TWAPs, and then they'll be allocated. So the advisor can select on both a firm by firm basis and client by client basis that customization, right? So the most popular one right now is 70% Bitcoin, 30% Ethereum. There's some back testing where that makes sense. The data is somewhat not statistically significant because there's outlier data with obviously Ethereum going from less than $1 to $2,000 today. But that's kind of what we're doing. So really focused on Bitcoin, Ethereum, helping clients put together those customized portfolios between those two assets, adding those to their portfolios, how to think about adding it to a model portfolio, and then going from there. So we have a really strong focus on working with investment committees and portfolio managers to get these assets added to model portfolios, right? Understanding that, and then really kind of going down the line across the other investment opportunities and products in the space, which we can kind of go into as well.
Help me understand the tech stack here and where you guys fit into it. So for example, if someone is using Orion and they're using Redtail, let's say, as their CRM, they're using, eMoney or MoneyGuide Pro for financial planning software. How do you guys fit into that system? Maybe they're custodying at Schwab, for example, or Fidelity. How does do they log into Orion? How do they access you to view their clients' accounts and how things are allocated? How does that piece work?
Yeah, so there's two ways right now that you can access our account. We are building upstream partnerships where you can actually access our platform potentially through some, upstream TAMPs, IBDs, things like that, which we're working on. However, right now the way that you can access it is through our website or SSO to your basically internal website. So you would either go to your internal website or you'd go to our website to sign in, log onto your advisor account, open an account kind of that we went through that only takes a few minutes. The client then signs the contract digitally. That whole process can happen in 10 minutes. The client gets onboarded, funds the account. We kind of go through all of that. So they wanted a 100K market order, boom, executed. And then from there, the reporting gets sent back to Orion where they can see their clients' direct Bitcoin and ETH holdings right next to their basically public equities, fixed income, other alternative investments. All within one kind of unified place. So that's what the experience is, right? Very quick onboarding. We deal with all the execution, custody, and reporting, and then it gets sent back to Orion, which is how that they can, advise on the assets, see the assets, and then also bill on the assets as well.
And in terms of what gets sent back to, it gets sent back to Orion. Is that coming from Gemini? That Gemini is pushing that to Orion, or are you guys pushing that to Orion, or how does that work?
Yeah, so Gemini does not do any integrations with those portfolio management platforms, and they don't do performance reporting. So we do all kind of the performance reporting, position files, cost basis files, performance reporting. All of those integrations is actually Eaglebrook getting integrated to those platforms. So these portfolio management systems are all different. They each take anywhere from 4 to 6 months to get integration complete. But we've been working on it since September of last year. So we're integrated to all the major platforms right now. The ones I can mention at the moment are Orion, Tamarack, and Black Diamond. SS&C Advent, which we just actually put out a press release yesterday, but all the other major ones that RIAs use will be able to cover the full market, hopefully by the end of Q3. So look out for a few more announcements, because I think that's one of the most interesting pieces of this market is portfolio management integration.
So you're getting the data from Gemini, and then you're doing your work on it, and then you're connecting it back to Orion or Advent and so on.
That's exactly correct. Yes.
Okay. How does the advisor get paid on this, and how do you get paid?
Yeah, so we actually bill the custodian bills in kind, monthly in arrears. Basically, gets calculated daily, taken out monthly in the asset. So in Bitcoin and Ethereum, the advisors we're seeing the way they do it is it gets sent to Orion or Black Diamond or Tamarack. And because they're seeing it on a day-by-day basis, they can add it to their fee calculation, and then they debit it from a cash account at Fidelity or Schwab. So that's the workflow we're seeing advisors. And then what we've also done is integrate directly with the billing software for these RIAs. So we'll integrate directly on the billing side too, with basically managing new account openings. So they'll see it both on Orion, Tamarack, and Black Diamond, and then they'll also see it with their internal billing process as well.
And how much do you charge?
So we charge 1% management fee.
Okay. And then Gemini, what are their fees for Gemini?
Yeah, so we have no transaction fees, so no trading fees. And then Gemini charges 30 basis points on the custody side.
Okay, so basically it's 1% from you, it's 30 basis points from Gemini, so it's 1.3% per year, plus on top of that, whatever the advisor wants to charge.
Yep, and most advisors that we're seeing charge half of their advisory fee. So if it was 1%, they'll charge 50 basis points on that account.
Okay. And what are you finding with firms like Mariner or Dynasty or any other firms that you're working with? What are their requirements for their advisors to be able to offer Bitcoin or Ethereum to their clients? Do they have to go through some in-house training? Do you guys provide that training? How does that work?
Yeah, so we do training for some. They have in-house training, which we help with, which is a lot of disclosures, kind of 101s on how the market works, how to talk about it with clients. So there's that. What we help with, a majority of the basically training that we do is more on the diligence side, which is basically our own diligence, right? We have 16 diligence documents. They were from business continuity plan to SLOA to the SEC custody rule, all of those things necessary to get it across the finish line with, let's say, a general counsel or COO, one of these large firms. So we do the majority of the work upfront, specifically for advisors to be able to offer it. It's a lot of basically disclosures to the client and then training that's either, that we help with or that the firms, the larger firms would put together themselves, which is basically a questionnaire or a list of modules that goes into how Bitcoin works, what it is, what the merits of the investments are, what the risks are, and then how to articulate it to clients so that they can then offer it to their end investor clients. So that's typically what we're seeing in the market. Then obviously the other big compliance checklist is ADV updates that has digital asset risk disclosures, as well as adding a new custodian, which is Gemini Trust Company.
So you and I are fans of Bitcoin and advocates of a digital currency like Bitcoin, yet the vast majority of financial advisors out there are not. Some of them still think it's a Ponzi scheme. Some of them think it's not something that's investable. They think it's like gold. It has no intrinsic value. There's no cash flows, on and on and on. What would you say to these advisors as far as, if they're a financial professional, is it incumbent upon them that they need to explore this area, or is it something that it's fine if you're not interested? That's totally fine. No harm, no foul.
That's a great question. I think I have some, interesting things we've gotten recently from RIAs is that back when we started talking to people in 2019, even 2020, it just seemed really far out there, right? There were some clients demanding it. There were some people doing it. I want to say it was definitely related to price and a lot of major institutions getting in, like Morgan Stanley, obviously Fidelity, State Street, Mass Mutual, Square, kind of the PayPal, the list goes on. I think it was probably around March, April. Obviously, Bitcoin was over 50K. Client demand was through the roof. I started to hear a lot of advisors and basically owners of these RAs say, this is now defensive. Hey, this diligence process might take 3 to 6 months, but we need to do this because we know this isn't going away. So it's kind of what everyone had been saying since 2016. Hey, this is going to be an asset class. This isn't going away. This is going to be important. So it's definitely something you need to look at. I think there is somewhat of a sense of urgency in being getting basically up to speed on it, because the risk is that one of your competitive RIAs, if a client's deciding between you and another advisor, and one advisor understands this asset class, can offer Bitcoin, Ethereum, eventually DeFi, and all these other strategies in this structure, depending on whatever structure that RIA decides, and that client does want to see that, they're going to go with that one. So it's almost defensive, and it's also a way to differentiate yourself without doing a ton of work. You can spend a weekend, going through a lot of our research materials and get a pretty good understanding of how to talk to clients about it, which we think is the most important part. So I would say that's how we're seeing advisors view it, and that's how we view it, is that this is still defensive. This is now defensive, and everyone now needs to do the work. However, for, let's say, a 2 to 4% allocation, this requires more investment diligence and regulatory and compliance diligence than any other asset class we've seen. So sometimes it's not top of mind, especially when it's down 37% on the quarter. But I think, what's really interesting is that there are now basically secure and compliant ways to access it. We do all of the work for you. So you don't need to, go to one of these custodians, build all the technology we built for the next 2 years. We code compliance and basically SEC custody rule within our SMA platform. So you don't need to worry about that. You just need to review our materials, confirm that, everything checks out. And then you can, do the ADV updates, the trading, the modules, all those things. And then you can start allocating. But that process, I think the quickest process we've seen from an RIA interested to onboarding clients was about 2 months. But what we're seeing is that that's probably going to be closer to 3 to 6 months to do all of that work while still operating their practice and all the things associated with that.
Bitcoin attracts a wide spectrum of people. So on one end, you've got people who say, I think this is a potential investment that could go up significantly in value. So I'm going to look at it just as an investment opportunity and make some money. Then you've got another end of the spectrum that says, I think this is a way to opt out of the fiat system, to opt out of government control, to separate money and state, and to be decentralized and permissionless and, get rid of government, so on and so forth. How do you think about it? And is there room for financial professionals who live in a centralized world and believe that there is some value in government, that there is some value in centralized institutions, whether it's banks, whether it's exchanges? How do we reconcile wanting to invest in Bitcoin, but also not feel like we're contributing to the overthrow of the government?
That's a great question. I think this is a lot of the conversations that I have with advisors, that demand is coming from a bunch of different areas, right? And you have to remember, this isn't a US equity or US company. It is a global asset traded in 200 countries 24/7 and has over 120 million users, right? Up from less than 1 million in 2013. So what we're seeing, at least in this specific market, is that demand is coming from the first group, which is people that invest in it for the asymmetric upside, right? They view it as an asset that can potentially reach parity with gold over the next 10 years, which would be around, call it, 20x from here, which gives these, everyone access to these potential venture capital style returns that are liquid, right? And if you position it correctly, say 2 to 4%, if it goes the other way, it's not going to materially impact your net worth, but the upside of, call it, those venture capital style returns could, greatly impact your portfolio. So that's one area we're seeing, and we're seeing a lot of people allocate for that reason. But that's not the only reason to allocate. You kind of have to go back and say, okay, do I believe Bitcoin can take market share from gold? How does it fit within the macro environment? How does it fit in the secular trends like the digital economy, money printing, quantitative easing, in potential inflation, whether it's transitory or not? So there's a bunch of different areas that we're seeing demand for Bitcoin. Obviously, the first nation has adopted Bitcoin as legal tender, El Salvador. We're going to continue to see all these different angles. People are adding, basically institutional investors are adding it to their balance sheet. Retail investors are investing in it for a few different reasons, right? It's a digitally native asset. You can store and send it on the internet. The millennial generation is adopting it because they view it as our generation's gold, right? We're the first digitally native generation. So we're adopting it over gold, which, we've seen as Bitcoin being in top 5 holders from millennials specifically. So that's kind of how we think it kind of fits into the environment, and demand is coming from all these different areas. But then taking a step back, the one thing that we really track closely is adoption, right? The bear case is basically two things. One, if the Fed and all central banks stop printing, that's going to be bearish and negative for Bitcoin, right? That's going to be the basically biggest issue. The second is that adoption basically slows or stops. We don't believe that that's the case, right? Obviously, Bitcoin has around 120 million users right now. It's growing at a fairly fast pace, 116% per year. If you believe that adoption will continue for a variety of different reasons, right? Bitcoin being a scarce asset while central banks are basically printing trillions of dollars, being digitally native, being this savings technology that anyone in the world can access, this digitally native store of value that is independent from any financial market, geography, or government. If you do believe these things and believe that adoption will continue, then all you're betting on is an adoption curve that's similar to the internet, right? And by 2025, if it does follow a similar adoption curve to the internet, Bitcoin can have 1 billion users. And with Metcalfes Law, obviously, that means the market capitalization and total value of the asset class and Bitcoin specifically will grow. So we follow that fairly closely. And as that deviates, whether to the upside or downside, we want to inform our advisors on how that's changing, and then also looking at specific on-chain analytics. We can do a lot of that as well. So the data for how many Bitcoin users there are isn't the best, but you can kind of back into it. But then the on-chain metrics can also tell you a similar story. So we think it's really about zooming out, deciding if you actually believe that this is going to be a store value right over the next 10 years because it's better than gold for a variety of different reasons. It's cheaper to send and store, right? It has these network effects that gold doesn't have. It has a more transparent monetary policy. By 2025, it's going to be more scarce than gold, measured by stock to flow ratio. There's a few of these different things that are factoring into the investment thesis for Bitcoin, and why we believe that it actually can fit within a discretionary model portfolio, and financial advisors can start offering it to clients.
Many advisors have trouble trying to wrap their head around, how do I value this thing? And you just described some ways to try and value it. But if we think about investing, so we've got stocks, we've got companies that have assets, companies that generate earnings, that pay dividends. So it's very well established how we can calculate what a quote fair value for a stock is. We've got bonds. They have a coupon, they pay interest, so we can value those things. We have venture capital investments, which in many cases are emerging companies. We know how to value them, or their real estate, their hard assets, and real estate can pay some spit off some income as well. So where in our valuation model or valuation construct should a financial advisor place Bitcoin? Because it is a very unique animal, and we do compare it to gold. I mean, I get that, but so many advisors are like, I'm never going to own gold, because they just don't have a place in their valuation framework for where gold would fit. So what do you say to someone who says, I just can't find a bucket to put Bitcoin in where I can wrap my head around it, and I can say to a client, I think we need to have an allocation here, and here's why. So let me stop there. And then I also want to dig into the valuation. How should we value what we think Bitcoin is worth? So let's just start with the first piece about what bucket should we kind of put Bitcoin in, so we can start wrapping our heads around using this as an investment.
Yeah, so I think valuation is definitely the biggest hurdle, because to be candid, there is no way to value Bitcoin, just like there's no way to value gold or silver or anything like that. So we'll kind of touch on the different valuation methodologies and how we would explain it to an advisor. But your first question on what bucket it fits in. So when we do our portfolio models and implementation, we take it from equities, right? And the way to think about it is that Bitcoin is obviously slightly more volatile than equities, but it's basically liquid. And the way we put it in a portfolio is actually viewing it as a technology investment, basically a technology investment in an equity. And it fits into there because it is a network similar to a lot of these major networks that we actually invest in the FANG part of your portfolio. So that's actually where we'd say take it out of, or view it that's actually where you're adding it to, right? So we would say it fits within equities. But what's great is that it's non-correlated. So it also has the impact of improved diversification, which can reduce exposure to economic cycles and increase risk-adjusted returns. So take it out of the equities piece of the portfolio, view it as a technology investment, right? With basically venture capital style risk return profiles. And then also it can be part of the alternative investment bucket as well. So you kind of get both, but I wouldn't recommend, if you wanted to make a 4% allocation, I wouldn't say, hey, take 2% out of your alts bucket, take 2% of your equities. I would just choose one, and that's how it fit within the portfolio.
Okay. So that's good. So you're saying for the most part, take it out of the equity piece. So if I've got a 60% allocation to equity and I went 4% to Bitcoin, now I'm looking at 56% equity, 4% Bitcoin, and that's my 60%. And then the 4% Bitcoin is going to be really kind of targeted to my technology allocation within the equity sleeve. Okay, so that makes sense. All right. Now let's talk about valuation. So as we're having our conversation today, Bitcoin is down about 40-ish% from its all-time high in the low to mid 60s. And so how do we know whether today's price is the right price, or the 64,000 from earlier this year is the right price, or $1 million is the right price, or $100 is the right price? I think, again, people have just a hard time wrapping their heads around that. So is it, and I guess the other thing is people will say, well, the value of Bitcoin is only worth what someone else is willing to pay. And so if you run out of other people who are willing to keep this thing going, then the price is just going to continue to drop over time. So I know you talked about the adoption curve. So are we making a big bet that the adoption of Bitcoin is going to continue to rise? And if that is the case, then we're going to have, continue to have these network effects and so on and so forth. So is that one way to be thinking about this?
Yeah, so that would be kind of viewing it with Metcalfes Law. Basically, every new user added to the network exponentially increases the value of the network. It is somewhat difficult to put an actual price target using Metcalfes Law. The way that actually we look at it, and we think advisors can look at it, is that it's not extremely quantitative, but it is a good exercise. Basically, Paul Tudor Jones put out a great research note back in May of 2020 called The Great Monetary Inflation. And the second half of it was talking about why he allocated to Bitcoin. And his framework was basically as follows. We believe Bitcoin is an emerging store of value, and it's competing against gold, global M2, and basically financial assets, right? Financial assets being the largest one at $266 trillion, global M2, 40 trillion, gold, 10 to 11 trillion. Bitcoin at the time, was I think around 200 billion. Right now it's around 700 billion, 600 billion. Looking at those three other assets that Bitcoin is competing with, the score for basically a store value is kind of looking at four different things. That's trustworthiness, liquidity, purchasing power, and portability. Those are kind of the four core qualities or characteristics of a store value. So you kind of put together a chart and say, okay, is Bitcoin liquid? Has it retained its purchasing power? Is it trusted by a large group of basically investors and users? And is it portable? Now, trustworthiness is probably where it scores the lowest because it has a very short period of operating history compared to, gold at 2,000 years and fiat currencies, 1971. Financial assets, obviously, a long time too. But then if you look at everything else, right, Bitcoin is as liquid as a FANG stock. Bitcoin has retained its purchasing power over the last 12 years since inception, and it was the best performing asset of the decade. And Bitcoin is the most portable asset out of all three because you can basically leave any jurisdiction, which is not that relevant in the US because there's not capital flight or basically government seizure of assets and things like that. But there are unfortunately other areas in the world where there are authoritarian governments. Being able to leave a jurisdiction with $10 million worth of assets in your head, going to another jurisdiction and being able to recover it makes it a great store of value. And basically why people view Bitcoin as kind of Swiss bank account in your head or in your pocket, as well as kind of a global savings account that anyone can access. That's obviously not super relevant for US investors, but it does make it a strong, basically store of value. So I think after learning about Bitcoin, doing your own research, reading all of kind of the white papers that we put together on different aspects of Bitcoin's design, history, development, infrastructure building, how people are investing in it, what's happened in the previous market cycles, all of those things, you can kind of sit down and say, okay, how does Bitcoin score against all these other basically stores of value? And if you look at those scores and compare it to the other ones, Bitcoin actually has a pretty high score, but compared to those, it has a lower valuation. So you can look at it relatively to those. And if you think more capital is going to flow and adoption will increase, that would be a reason to allocate. Putting a specific number on it, I think if you want to be very specific, Bitcoin is most similar to gold. And while a lot of, like you said, RIAs, which we know most RIAs don't have a gold position actually, but Bitcoin actually has different risk return profiles and I think a different investment thesis than investing in gold. Well, gold is basically just defensive and it's just an alternative store of value where basically if markets are going down, like in 2008, 2009, or when the government's printing, you use it as defensive, store of value and defensive piece in your portfolio. Well, Bitcoin is defensive like gold because it's independent, scarce, it's non-correlated, all of those things, but it also has this upside potential that gold doesn't have. So that's why we're seeing people, put it into their portfolios. If you do all this work, see how it all works, see kind of the value of Bitcoin over gold and the advantages, and say, hey, I think on a 10-year time horizon, if adoption will increase, I think Bitcoin could take 50% market share from gold, right? Which would be around a $5 trillion market cap. Then that's kind of the price target I put on it. You did your own research, and that's where you go from there. We don't specifically put price targets on it because it is so difficult to basically value a non-productive or speculative asset. But we will walk you through your journey to help you come towards the right decision and how to think about it from your own framework. So we give you all the tools, we give you the framework. We urge you to do kind of your own work on your end, and then we can help you come to an understanding of, hey, what are the expected returns? How can we fit this into a portfolio? What's the risk return profile? How does it affect my Sharpe ratio, standard deviation risk, max drawdowns, all those things. So that's something that we work with advisors on.
Another thing that I think advisors ask themselves is, if I'm going to allocate 1% or 2%, which is, I think like Rick Edelman, for example, I think he suggests maybe a 1 or 2% allocation to Bitcoin. I think do you have like a recommended allocation? I mean, obviously it differs from client to client, but is there, what are you seeing as it's sort of coalescing around with your clients?
Yeah, in practice, I've asked the over 200 advisors that we work with, and it's actually closer to a 3% allocation.
Okay.
We have some with 6, some with 2, some with
Right.
4. So we're actually seeing them bucket it between 2, 4, and 6, which is actually what we recommend as well. Is if you're super bullish, right? Understand this. Your clients are a little bit more risk tolerant. Do 6%. Right. If you really just want to check the box, get your feet wet, but you still like the asset class, understand adoption, scarcity, and how it's taking market share from gold, do 2%. But most are falling in within that 4% bucket, actually. But because we just launched back in November, a lot kind of started it to obviously
Right.
drifted up. And then a lot started, 4. So kind of our blended average is around 3% from what we're seeing in the
Okay. So
market.
let's let's say you guys are 3%. I was talking to another advisor who is between 5 to 20%, which is certainly the highest that I've talked to in terms of advisors. But I think one of the other concerns is Bitcoin is such a complicated asset in terms of, once you start looking into it, you realize all the different avenues that you can go down to try and figure out what the heck is this thing. And one avenue leads here and it goes there and it branches off there. And it's like an endless store of fascination and information and things that you can learn about it. So some advisors might be thinking, well, if I'm only going to allocate 1 or 2%, how much time do I have to spend learning about this thing? And is it even worth it for a 1 or 2% allocation if I have to spend a disproportionate amount of my time understanding it? And second, if this is a very volatile asset, which it is, I may have to spend a disproportionate amount of my time talking to my clients and talking them off the ledge if this thing happens to drop 50% in 30 days.
So I think being an advisor, it's really about relationships with clients and engaging with clients as strong as possible and as basically many times as possible. Your client doesn't really call you to talk about your 60/40 portfolio or what's going on in kind of the ETFs that you're investing in. And while it is a disproportionate amount, say 2 to 4%, your client wants to talk to you about what's going on in the Bitcoin market. So what it can actually do is strengthen your relationships with clients if you do offer it and do understand it, even though it is a small part of your portfolio. So if you kind of get overwhelmed and try to do too much work, I think we try to simplify it where it doesn't need to be so complex. That's why we say, hey, look at adoption, understand the qualities of it. We'll keep you updated on all the market commentary and what's going on, right? So because we're following all those on-chain metrics, but even though it's a disproportionate part of your portfolio, might be 2 or 4%, your clients can be calling and ask about it, 20, 30% of the time. So having an articulate response by having our market commentary weekly up or our monthly guide to the crypto markets up, going through certain charts, explaining what's going on, we think that can really help advisors engage with their clients at a much deeper level and strengthen those relationships and make the advisors, seem and look like experts because they actually are experts, from the education and research that we're providing to them.
As we're having our conversation here today, we've got a big situation going on in China, where China has really cracked down on the mining business, and virtually all of the miners for Bitcoin have shut down in China. So the hashing power of the Bitcoin network has dropped like 40 to 50%. So there's some concern that the security of the Bitcoin network now is about half of what it used to be. So, we could be subject to, say, a 51% attack. But beyond that piece, I think the larger issue is, how worried should we be that the government can come in, just like China has done, and basically said, we want nothing to do with Bitcoin. So we're totally getting out of the Bitcoin business when they were such a large part of it. So China's doing that. We've got here in the US, we have some politicians that think Bitcoin is the worst thing. We've got other politicians who are absolutely embracing it. So we've got a split here. We've got El Salvador, as you mentioned earlier, which is making Bitcoin legal tender. So they're certainly embracing it. What kind of risk factor should we put on Bitcoin as it relates to states or governments being able to really put the kibosh on this thing?
Yeah, so I think that's a great question. Every single call with advisors that comes up, regulatory current concerns. What happens if the US bans Bitcoin? Obviously, that's going to be extremely negative and will have major ripple effects in the industry. We view that as highly unlikely based on comments and work from basically every single regulatory body, OCC, SEC, CFTC, IRS. They all actually have some fairly clear language and rulings on how Bitcoin should be treated and how it should be operated. As an RIA ourselves, right, Eaglebrook's a registered investment advisor, we embrace regulation related to two things, basically best execution and custody. That would make our lives a lot easier in terms of articulating it to other RIAs, broker dealers, wirehouses, TAMs, things like that. So we hope there's more regulation, but around the clarity of, hey, how should this market be traded? How should these assets be custodied? Who's a qualified custodian? How do we make sure you're following the SEC custody rule? So we're embracing regulation. I think there's a very, very low probability of the US banning Bitcoin because of all of basically the comments that these firms have had. CFTC, SEC, the OCC just allowed basically nationally chartered banks to custody Bitcoin. I don't think they would have done that if around the corner the US was going to outright ban the asset. However, I do think it's positive for the US going after some of these basically companies and protocols that were, raising assets or outright scams that were basically hurting marketing to and hurting retail investors. I think that's where the government should be spending their resources, is knocking out all those basically scams and those unregistered security offerings, while focusing on having more regulatory clarity around trading and custody of these assets and what disclosures are necessary for SEC registered investment advisors to advise on these assets. So that's kind of how we see the regulatory landscape playing out, and we don't believe the U.S. government or any major Western governments are going to ban Bitcoin. China's fairly different, right? They banned the internet. They have their own internet, so there's a little bit more authoritarian than most of the governments in the world.
I want to wrap up with a couple of things. So one is maybe related to this regulatory issue or governmental issue. You recently moved the firm and maybe you yourself, from Washington, D.C. to Miami, Florida. So Miami's very well known these days as very crypto friendly. So what's behind the move from DC to Miami?
Yeah, so we wanted to move to a city that was more friendly from a crypto perspective, from what we were looking to do. And also, we're hiring and building a company, Eaglebrook. There was a lot more talent on the engineering, design, and investment side, actually down here in Miami, related to building basically fintech companies, as well as the on the investment side related to research and investing in the crypto space. So that was a big reason for the move. Is basically hiring, retaining talent, having an in-person office as the world goes back to normal, and then also proximity to clients. The majority of our largest clients are based in Florida, so being down here was a big reason. So crypto friendly city, better talent than DC, and then higher proximity to clients because we think meeting in person. Now that people are meeting in person right now is a major edge. So we're trying to get in front of our clients as many times as possible, presenting to investment committees, walking through all the diligence items, giving demos in persons, and really building those relationships.
Excellent. All right. And then the final thing here is there anything else that you want to mention here that either we haven't talked about or something that you want to reiterate that we've talked about? And then also, of course, mention if folks want to get in touch with you, what's the best way for them to connect with you?
I don't think anything specifically. I think if you are an advisor, if you definitely don't want to do it, I think that's your prerogative. You don't think it makes sense, that's fine. I think the majority of advisors have an interest, but realize it is going to take some time. We can speed up that process all the way from research, education side, as well as compliance and actual execution, of investments and adding an offering to your practice. So if you're an independent advisor and you're interested in offering Bitcoin and crypto, we would love to speak with you.
Excellent. And the website is
www.eaglebrookadvisors.com. You can log on there, schedule a call, and we'll get on the phone and walk through everything.
excellent. All right. Well, Chris, I appreciate it. Great conversation. Congratulations on the great work and what you guys have built there. And I think we both agree that we are still in the very early days of this movement.
Yeah, exactly. Thank you, Steve.